Okay, let's dive right into this explainer and unpack how Apple just hit a truly historic financial milestone. And honestly, they did it in the absolute most unexpected way possible. Welcome everyone. Today we're looking at a masterclass in corporate strategy, market patience, and just the undeniable power of consumer loyalty. You know, when we talk about global finance, certain numbers just sound fake, right? They're so massive our brains actually struggle to comprehend the weight of them. But what just went down in the stock market is very real, and it has completely reshuffled the deck in the tech industry. So get comfortable and let's explore exactly how the tech giant from Cupertino just reclaimed its throne.
$5 trillion. Just let the sheer scale of those zeros sink in for a second. Apple just became only the second company in the entire history of corporate finance to cross this staggering market capitalization threshold. And this wasn't just some tiny incremental bump in their stock price. This was a monumental leap that happened right during intraday trading. It's the kind of staggering figure that literally forces us to sit back and reevaluate how value is perceived and rewarded by the modern stock market.
And this dynamic right here perfectly captures the ultimate tech rivalry playing out right in front of us. Apple has successfully reclaimed the #1 spot as the most valuable publicly traded company on Earth. Meanwhile, NVIDIA, the semiconductor giant that's been riding an absolute tsunami of demand for their AI chips, well, they just lost the top valuation crown. For months, the whole financial narrative was whoever provides the hardware for the AI revolution is the undisputed king. But the market is this dynamic, breathing thing, and the narrative has suddenly shifted back. Apple effectively dethroned NVIDIA, reminding everybody that there is absolutely more than one way to dominate the global economy.
Let's look at the hard data behind this event. During intraday trading, the stock surged to a remarkable session high of $342.89. And it was precisely at that moment that their peak market cap pushed to approximately $5.04 trillion. Now, as is totally standard with the ebbs and flows of daily trading, the stock didn't just freeze at its absolute peak. It eventually settled near $340.08. But the threshold was officially crossed. That massive psychological barrier of $5 trillion was broken. And for the investors and analysts watching these metrics tick upwards in real time, it signaled a massive pivot in market confidence.
Section 1. Skipping the AI gold rush.
So the central mystery of our explainer today is this. How exactly did Apple pull this off while their competitors are aggressively spending tens of billions of dollars on AI? Right now, there is a literal gold rush happening in Silicon Valley. Almost every single major tech company is throwing absolute fortunes into artificial intelligence. We're talking massive server farms, buying up specialized chips, basically dedicating their entire corporate identities to the AI race. Yet Apple, the company that just crossed the $5 trillion mark, has been notably, almost stubbornly quiet on this specific type of spending. They didn't buy their way to this milestone by joining the frenzy, they won by standing back.
The contrast here is just stark. On one hand, you have heavy spenders like Google engaging in massive capital expenditures and data center borrowing to build the infrastructure of tomorrow. But here's the catch. Investors are starting to get incredibly anxious about these costs. It takes a jaw-dropping amount of cash to build AI infrastructure, and honestly, the immediate return on that investment isn't always super clear. On the other hand, Apple has simply avoided this cash-draining hardware race altogether. While everyone else is burning capital to build data centers, Apple is sitting on its cash reserves, shielding its investors from that anxiety. Market analysts are actually calling this a tech sector rotation. Basically, money is moving away from the heavy spenders and finding a safe haven right back in Apple.
I absolutely love this insight from Forrester's principal analyst, Dipanjan Chatterjee. He notes that Apple has resisted the AI spending race, betting that customer experience, not infrastructure investment, will ultimately determine the winners. Apple's entire philosophy is summarized right there in that one sentence. They don't care about having the biggest server farm if it doesn't directly and immediately translate to a flawless experience for the person actually holding the iPhone. They are betting the entire $5 trillion farm on the idea that you, the end user, don't care about data center borrowing. You care about how your devices feel, how they connect, and how they operate in your daily life.
Section 2. The power of the ecosystem. By leaning into 3 core strategic pillars, Apple relied on what they already do better than anyone else in the world to keep their margins high and their investors happy. First up, a robust hardware ecosystem. Their products are quite literally designed to work together flawlessly. Second, steady consumer demand. People just keep upgrading year after year regardless of broader economic pressures. And third, and perhaps absolutely most crucial for their bottom line, is the high-margin services sector. Think about the App Store, Apple Music, iCloud storage, Apple Pay. These services require just a fraction of the physical manufacturing costs of a laptop or a phone, but they generate massive, recurring revenue. This three-pronged strategy, that is the financial engine that powered them straight to $5 trillion.
But, they aren't just resting on their laurels. Bolstering this incredible market momentum is a brand new, highly strategic partnership in the United States. Apple and Klarna have just launched a flexible device leasing program. Now, you might be wondering, why does this matter so much? Well, because Apple products are premium, and premium comes with a premium price tag. By partnering with a massive buy now, pay later and leasing platform like Klarna, Apple is directly addressing the single biggest hurdle to consumer demand, which is upfront affordability.
Let's break down exactly how this translates into financial dominance. This step-by-step approach brilliantly makes premium consumer technology far more accessible. Step 1. You establish the leasing mechanism with a trusted financial partner. Step 2. You fundamentally lower those entry barriers. Suddenly, a top-tier iPhone, a super powerful iPad, or a professional-grade Mac isn't some massive one-time purchase. It's just a manageable monthly line item in a consumer's budget. And Step 3. This immediately drives strong product demand. The timing here is absolutely critical, by the way. They're executing the strategy right ahead of their upcoming earnings report. It's a highly proactive move to ensure that when they announce their sales figures to the world, those numbers reflect robust, accelerating demand.
Section 3. Will the moat hold? Everything we've unpacked today really services one single overarching concept: ecosystem lock-in. This remains one of the absolute most powerful financial moats in all of global finance. It's like a giant puzzle. Once you have an iPhone, you probably buy an Apple Watch. Then you get a Mac because, well, they sync perfectly. You pay for iCloud to store your photos. At that point, the friction and sheer annoyance required to switch to a competitor's brand is incredibly high. You are deeply engaged. You're loyal. You're locked in. And that lock-in, that is exactly what $5 trillion looks like.
And that leaves us with a fascinating dynamic to watch in the global markets. In the end, will customer experience always beat raw infrastructure? Can the tortoise truly outrun the hare in the long game of tech dominance? Apple bet entirely on the user experience in their deeply protective ecosystem moat, while others frantically race to build the back-end pipes of the AI future. For today, at a historic $5 trillion valuation, the market is clearly declared a winner. But, as we all know, the market never stops evolving. Thank you so much for joining me for this explainer. Keep learning, stay focused, and I'll see you next time.